Welcome back to the channel. As always, if you're copy trading, you are an absolute moron and you deserve to lose all your money. And with that out of the way, we're going to speak today about a stock called Reddit, ticker RDDT. And if you are not familiar with this company, you might be thinking about this stock as a social media platform, which is indeed how it started, but the reason why I'm looking today at this as a long position is because of the changes that AI is bringing into not only the whole ecosystem, how data is processed, but also which data is actually valuable and relevant. You may have heard, and this is something that you can look up on your own time, about the dead internet theory, which talks about the vast majority of content that we see online these days is being produced by bots, by AI, by machines, essentially by not real people. But if you're familiar as well with how this many of these tech companies monetize the data, it comes often from human users. So Reddit, as it stands today, is one of the few outlets where this real information can be found. So there are 20 years of real human opinions on everything, from the best speakers on how to parent, and that is the actual intelligence mode. There was a bit of a decreasing price obviously over here, as you can see. But that was because of revisions from analysts. And as you know, there's a bit of a SaaS winter theme happening at the moment. But in my view, based on what I explained recently, that mode remains intact and it will continue to benefit from the growing processing power of all these AI technologies that are coming to market now. If we have a look at the numbers, we can see that at the moment the company is a financial powerhouse. In 2025, they delivered 2.2 billion in revenue, growing at nearly 70% year on year. So if we go to the numbers here, we can see that top line is phenomenal and has been very, very strong since the pandemic and actually accelerating since 2023. Gross profit margin is fantastic too, of course. It's something that we will see often in a sector like this, but still high. What's important here is that the EBITDA margin has actually turned positive, and so has EPS, which if we look at the projections, it is still expected to grow very significantly. So think about in the whole picture, right, of how these AI things are playing out in real terms. You see all the hyperscalers spending really big, which is diluting their margins. You see as well many of the SaaS companies losing their shirt because the business model is no longer viable. Think like, for example, Salesforce and Adobe selling their solutions on a multiple seat package, which is now not necessary. Maybe you just need one package for one person as opposed to five, as it used to be the case before. This is not really happening with this company, and that's precisely the reason why I think following this massive drop in price when the stock went from 260 all the way to 150, it creates headroom for us to capitalize on that. So in Q4, their growth, which was 70% plus their profit margin, 45, equal 115. That is a level of efficiency that only the top 1% of the tech companies ever reach. So at a valuation of 22 times, yes, it is not that high as it used to be before, but we can expect perhaps a rebound back into those earlier multiples that we were seeing not so long ago. The fundamentals justify for this. And the narrative is also shifting. Users aren't just scrolling Reddit, they are now seeking information in it. So every week, 80 million people use Reddit as a search engine to find specific answers. This intent is gold for advertisers because when you search for a product, you are closer to buying it, of course. So why now? Like I said, the analysts cut their price targets and the stock sold off by 40%. Fears about competition for AI training data. But what I see here is dislocation. The business is fundamentally stronger than ever, and the price is on sale. If we look at the price target, we see that in occasions like this, right, when the difference between price and price target has been this high, it has led to very, very good opportunities to capitalize on the upside. And that is precisely the scenario that I suspect we can see here, especially over the end of April earnings. So let's say that the results are on par with expectations and guidance might be even better, right? We should see a few catalysts that sweeten the deal for us. So first of all is the $1 billion buyback. So management is literally entering the market right now to buy back their own shares, and that creates a floor for the stock price, which, like I said, has already sold off quite a bit and seems to have reached already bottom, which is confirmed by price action, but also technicals. You also have the bot verification point. This proves to advertisers and AI partners that Reddit's data is 100% human, justifying a premium price. And of course, as I mentioned before, the value of this data creates interesting partnerships for the company, right? Because it's so valuable. They're gonna be likely approached by some of the hyperscalers. So new integrations with Google and OpenAI are moving from just business deals to product features, and that could trigger an explosive re-rating of the stock value. So we'll have to see how that plays out. It is quite interesting to see that even though the average price target, right, was dropped a little bit and the stock followed, actually the average analyst ratings went up throughout that same period. So what we're seeing here, like I said, is a massive dislocation. There is that sort of uneven circumstances that we like to see for explosive upside. So we could see those re-ratings coming up, and that's exactly the reason why I'd be looking to structure this with some options. I'll be entering this trade very soon, likely on a 2-for-1 calendar ratio over June and selling some calls on the April expiry to raise some credits. Hope you enjoyed the video. See you soon.